Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louis, and we're glad you're joining us today. We're starting off with a look at the latest earnings expectations for Yes Bank, which is set to report its March quarter earnings on Saturday, April 19. According to estimates by brokerages such as JM Financial and Anand Rathi share and stock brokers, Yes Bank is expected to post double-digit growth in its net profit, ranging from 35% to 44% year over year. Now, let's take a closer look at the numbers. JM Financial expects Yes Bank to report a net profit of Rs 6,081 crore, which would be a 34.6% increase from the same quarter last year. However, this would also represent a slight decline of 0.7% from the previous quarter. The brokerage firm is forecasting a modest increase in net interest income of 2.6% year over year, but a decline of 0.6% quarter over quarter. On the other hand, Anand Rathi share and stock brokers is projecting a stronger earnings momentum for Yes Bank, with a net profit growth of 44.3% year over year to Rs 652 crore. The brokerage firm is also expecting NIE to increase by 5.2% year over year and 1.9% quarter over quarter. It's worth noting that both brokerages have differing views on the bank's profitability, NIE growth, and loan performance. JM Financial has maintained a sell rating on Yes Bank due to concerns around margin compression, limited loan growth momentum, and valuation considerations. As we always say on the Riskwiser Zone, it's essential to consider multiple perspectives and do your own research before making any investment decisions. We'll be keeping a close eye on Yes Bank's earnings report and providing you with updates and analysis in the coming days. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of geopolitics and international relations. Today we're exploring a fascinating development in Eastern Europe, where Poland is seeking to bolster its defense capabilities in the face of Russian aggression. Polish President Andrzej Duda has been actively pursuing a strategy to enhance his country's security, including potentially gaining access to nuclear weapons through NATO's nuclear sharing program or France's independent nuclear deterrent. This move is not without controversy, as it raises questions about the role of nuclear weapons in European security and the potential implications for the region. On one hand, Poland's efforts to strengthen its defense are understandable, given its proximity to Russia and the ongoing conflict in Ukraine. The country has already increased its military spending to 4.7% of its GDP, making it one of the largest defense spenders in NATO. By seeking access to nuclear capabilities, Poland may be attempting to deter Russian aggression and ensure its security within the alliance. On the other hand, this development also raises concerns about the potential proliferation of nuclear weapons and the impact on regional stability. Some argue that introducing more nuclear actors into the region could increase the risk of miscalculation or accident, potentially leading to catastrophic consequences. It's essential to consider the complexities of this issue and the various perspectives involved. Poland's pursuit of nuclear capabilities is not a straightforward decision, and it will likely require careful consideration and diplomacy from all parties involved. As we continue to monitor this situation, it's clear that the geopolitical landscape in Eastern Europe remains dynamic and unpredictable. The interplay between NATO, Russia, and European nations like Poland and France will be crucial in shaping the region's security architecture. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up today's episode with a thought-provoking story that highlights the complexities of global trade, technological advancements, and economic growth. As we've been discussing throughout the show, navigating risk in the modern world requires a deep understanding of these interconnected factors. Our story takes us to China, where the government's Made in China 2025 initiative has been driving rapid technological progress and self-sufficiency in key industries. While this push for innovation has yielded impressive results, such as Huawei's development of advanced chips and smartphones, it also raises important questions about overcapacity, security concerns, and the impact on global trade. On one hand, China's efforts to move up the manufacturing value chain have created new opportunities for economic growth and competitiveness. The country's investments in research and development have paid off, with many Chinese companies now rivaling their Western counterparts in terms of innovation and quality. On the other hand, this rapid expansion has also led to concerns about overcapacity, with many industries experiencing fierce competition and price wars. This phenomenon, known as involution, has resulted in significant losses for some companies and raised questions about the long-term sustainability of China's economic model. Furthermore, the security implications of China's technological advancements cannot be ignored. As we've discussed earlier in the show, the increasing reliance on Chinese technology raises concerns about data security, intellectual property theft, and the potential for state-sponsored espionage. As investors and risk managers, it's essential to consider these complexities when evaluating opportunities and threats in the global economy. While China's growth story is undoubtedly impressive, it's crucial to approach this market with a nuanced understanding of the risks and challenges involved. In conclusion, the Made in China 2025 initiative represents a significant turning point in the country's economic development, with far-reaching implications for global trade, technological innovation, and security. As we navigate these uncharted waters, it's essential to remain informed, adaptable, and cautious in our investment decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.